Interest rates have risen 13 times since May 2022, with the cash rate sitting around 4.35% at this point in time, and most homeowners and investors paying somewhere between 6 to 8%. How do property prices keep going up? In today's video, we're going to talk about the relationship between interest rates and the property market and where things might be heading moving forward as to whether you should buy now or maybe wait to buy in the future. Now, my name's Luke and I talk all things real estate, renovating and financial freedom. And Emily and I share our own property portfolio on this YouTube channel. I try to be as transparent as possible with recent client purchases, talk about current news in the property market, and share our renovation projects to give you an insider look as to how we add value to our own property journey. So if you're interested in any of that, make sure you subscribe down below and head over to purposeproperty.com.au if you want to book in a free chat with myself. Now, as you can see on screen, this is where interest rates currently sit today, 7th of August, 4.35%, and they've been on hold since December 2023. Before that, starting from May 2022, we've had those aggressive increases, and now the market or the interest rate cash rate has been steady for a period of time. The question is, what is going to happen next? Will rates fall sometime soon, or are the RBA going to keep the cash rate on hold for an extended period of time to try and keep more pressure on Australia's economy and reduce the rate of inflation happening here in the market? The property market is navigating a complex environment of higher interest rates and rising median prices, making home ownership increasingly challenging for many, according to Karen Dellow, senior audience analyst at PropTrack, which is one of the big data houses here in Australia. The market is currently going through a period of high interest rates and high median prices, making it difficult for many people to buy property. Now, we need to argue about whether this is currently a high interest rate environment. I would actually disagree with the sentiment that we currently have high interest rates. I definitely agree that the median prices are very high. We're sitting at 7% compounding growth, up to 8% compounding growth on assets over a 30-year period here in the property market. At an 8% compounded return, it would roughly take 9 years for your property to double in value. And what we're seeing is if you're getting an 8% return every decade across through 30 years, that means doubling every decade in terms of the property values. So $500,000 to $1 million to $2 million can happen over a couple of decades. The big issue is that wages have not kept up. Wages have not been growing at 8% the last 30 years. And this is where we get the divide between the wages and the property prices. So how on earth can people still afford to buy property? Well, they can't. They can't buy in all the locations they want to live. I can't buy a $10 million beachfront at this point in time on the Gold Coast. A lot of people can't buy a family home for $800,000 to $1 million because they can't afford it. And so people are needing to be more reserved and cut down on their spending and live in smaller dwellings further out from the CBD to afford a newer place. And that's what's happening with these developers. A lot of the developers are creating new stock that's on very small blocks, which should essentially be townhouses, right? These roof lines are a meter apart. They're calling them houses. Why not just connect the walls and make it a townhouse and at least make it a little bit cheaper for the buyers to buy these new properties? That's what we're seeing in these new house and land estates. Here in Southeast Queensland, I can think of the Yarrabilbas, the Park Ridges, the Ripleys. These areas are where housing and land estates are 250 to 400 square meters in terms of the homes. Now, a lot of Australians want new homes because they don't want the maintenance. But what they get is a small block with no value add potential and not any land that you can do anything else with. So we might have very high property prices and people might be compromised in terms of what they can buy, but I would disagree that we are in a high interest rate environment. Interest rates sitting between 6 to 8% in this point in time are just maybe around, or if not slightly above, long-term averages in terms of market interest rates. But if we were sitting at 9, 10% in terms of standard interest rates for a mum and dad owner occupier, or 10% for investors, I would definitely be considering that a high interest rate environment. So I think we need to go up 2 to 3% in terms of interest rates for us to be in a high interest rate environment relative to the median property prices. So based on all of this, affordable properties are seeing increased demand. The demand for affordable homes has surged as buyers face reduced borrowing power due to high home loan rates. High home loan rates have reduced buyers' borrowing power, leading to increased demand and higher growth rates for more affordable properties. This trend is particularly evident in the 15th percentile of property prices, which has seen consistent growth over the past 5 years. Now, to give you a boots on the ground look, this is exactly what we're seeing here in Southeast Queensland. If you're a buyer between $400,000 to $700,000, that area of the market is growing much faster than the high-end homes, which are $2, $3, $4, $5 million. The reason being, we've got this chase or run to affordability, and there is a significant amount of competition. I've seen recently in the last 2 months, 20 bidders, 25 bidders for a single property. And we tried to buy a property recently for a client that we valued around $650,000, and it ended up going for $695,000 with about 25 bidders going after this home. Now, the home was nothing special. It was a low set brick home on 600 square meter block with drivable side access in okay condition. It was fine inside, tiled floors, reasonable kitchen, things like that. The home market value was around $650,000 in our opinion, but it went for $50,000 or close to $50,000 more because of the demand in this lower price point in the market. Now, what we're seeing is when you get over that $700,000 price point, it gets not a lot less competitive, but less competitive than that lower price point. The reason being is all those first home buyers are tapped out at the $700,000 mark. So if you're buying over the $700,000 mark, you're ruling out anyone who's using the first home buyer stamp duty concession or using the Australian government scheme to get into their first home with a 5% deposit. And so what that means is you knock out 10 or 20 of those buyers, and you're only competing with 5 to 10 buyers for properties between that $700,000 to $1.5 million mark. And then there would be even less buyers over $1.5 million, but at that price point, they can generally afford what they want to buy. It's then more about buying the right property for them. So there's definitely been a push. And I would even say that some of those lower price properties look like less value to me at this point in time, and because of this increased pressure on property prices at the low end of the market. So luxury market defies economic constraints. Well, that's probably because they've got the money to defy what's going on in the economy. Despite the affordability challenges for the majority, the high-end property market continues to show significant growth. Dello noted that properties in the 85th to 95th percentiles have outpaced the national median in price growth since the rise in interest rates. While many buyers are adjusting their budgets and purchasing more affordable homes, others are not restricted by price. Isn't that the truth? So if you're a high income earner and you're buying a $1.2 million plus home, you're going to be less price sensitive. And if you want a certain location or a certain school zone, or you want to be beachfront on the Gold Coast and you've got the money, then you're going to pay for the right area. If you, for example, you want to be on Palm Beach or at Coolangatta, you're going to pay to be in that spot. There's only a certain number of homes on those special locations along the beachfront in those strips. And same with Brisbane City. If you want to be in West End or right towards the CBD, or you want to be in the Brisbane State High catchment in Brisbane, for example, there's only 2-3 suburbs that have Brisbane State High School catchment. So people will pay $1.5 million or $2 million to buy a home in these areas because that's what they can afford, and they can pick and choose what they want to buy. So there's less impact from the economy when these high net worth individuals are buying property. Now, regional variances highlight property market dynamics. The growth trends vary significantly across Australia's major cities. Adelaide saw balanced growth across all market tiers, while Sydney's luxury market outperformed its lower end segment. Sydney's lower percentiles grew much less than its higher percentiles, with 8% growth in the 75th to 85th percentiles compared to just 2% in the 15th percentile. Now, I think this is really interesting because I own a regional property. Emily and I own a unit block in Coffs Harbour, which is roughly 2 kilometres from Jetty Beach. And the reason we bought that property is we saw the value potential in a big regional market in Coffs Harbour with over 100,000 people and a diverse economy. And we bought in a very good area. We bought in an area that's landlocked, only a few kilometres from the city or the CBD area, and a few kilometres from the beach at Jetty Beach. So we really like the location. Now, what we're seeing across Australia, which a lot of you will find interesting if you're a borderless investor, is what's going on in Sydney, Melbourne, Adelaide, Perth, and Brisbane. Those are the 5 major markets in my opinion. Hobart's definitely fallen off, and I think will continue to decline. Adelaide, which has been a slow and steady growth runner for the last few decades, I actually think Adelaide's growth is going to slow, and it's going to be Brisbane and Perth that continue the charge over the next 5 years. Sydney will always be strong in that luxury market because people want to be in those high-end homes, and there's a lot of high net worth individuals. Plus, Sydney is a city unlike any other in Australia in that it has the international demand to buy in that area. And the other thing is Melbourne might be a slow charge over the next few years and not have much growth, but it might be counter-cyclical to buy in Melbourne at this point in time. So really interesting seeing the difference in the areas across Australia's capital cities, as well as what's going on in the regional markets, with each of these markets moving back towards their own dynamics. Whereas during the COVID period, everything grew, everything went up. But now we're moving back to a more normalized economy and a normalized system where, the Perth, the Brisbanes might grow, Adelaide might be slower, Melbourne might be counter-cyclical, Sydney might still be strong because of the international interest. And so we're coming back to more of a normal Australian market. Now, affordability challenges meet continued market strength. Despite the ongoing challenges of higher interest rates, the property market remains robust, driven by strong demand across both affordable and premium segments. Affordability challenges loom large for many prospective buyers. The property market remains buoyant across all segments. Now, why is that? We're in a higher interest rate environment. Property prices have gone up and up and up, doubling every 9 to 10 years if we've had 8% growth. How can it be true? Now, the reason I think this is the case is because we have a higher floor than we've ever had before. The cost to pay council, to pay for civil and water, and to get a road in place just to get a parcel of land costs easily $300,000, if not more money at this point in time. So just to get a parcel of land here in Australia, which is a title and subdivided and has water and electricity connected to the block, is several $100,000. Now, when you want to go and build a house on top of that, a starter home, a kid home even, with no builders on it, is going to cost you $100,000 just to get a kid home. And then you've got to put in all the labor to build that asset, which for most people is easily another $100,000. So the cheapest home that you can go out and build at this point in time is probably around $200,000. Realistically, most Australians are going to want a home that's got more lifestyle qualities to it, enough bedrooms, enough space. We want air cons, we want dishwashers, we want to fit it out nicely. And so most Australians, when you look at a home, are going to spend $350,000. So all these new housing stock that are coming through, in terms of a cost base, you're looking at $350,000 for the land, $350,000 to build the house. That is $700,000 as a base price point before you get to more luxury fit outs for a starter home in the suburbs, a long way from the CBD and not in prime locations. What this means is all of the stock in good locations that were built in the 70s, 80s, 90s, 2000s, which still have value in terms of the home, the rebuild value has gone up significantly. The cost to rebuild those 3-bedroom homes is now $200,000 to $300,000. And so what we're seeing is the floor has risen significantly. Also, though, the ceiling is very high with those high net worth individuals, but for most everyday Australians, it's the floor that's causing them issues in terms of property prices. That's why we're seeing the run on the affordable assets. Now, if you are struggling and you're looking to buy your own home or an investment property and you want to talk strategy with myself, you can head over to purposeproperty.com.au to book in a free session if you're looking to buy a home here in the Southeast Queensland market in the next 6 months. If you're not buying in Brisbane, but you want help and you want the steps to build a multi-million-dollar property portfolio, to give yourself more choices and not be slaves to a 9 to 5 and to have more time and more flexibility, then you might be interested in purchasing the Invest with Purpose course. It's a step-by-step guide on building a multi-million-dollar property portfolio, and it takes you through exactly how Emily and I, on everyday Australian incomes between $50,000 to $120,000 as we grew our property portfolio, we were able to create a $5 million property portfolio by the age of 27. So if you're interested in the Invest with Purpose course, head over to purposeproperty.com.au and click on course. Now, I'd love to hear from you in the comments below. What do you think about interest rates moving forward and affordability in Australia's property market? If you could subscribe to the channel and drop a like on this video and click a video over here that YouTube thinks you'll really like. Thanks for sticking around. I'll see you in the next one. Peace.